Welcome back, everybody, to another episode of Alt Reports Radio, where I am really happy to be on here with Fuquan Bilal of the NNG Capital Fund. And today, you were referred to me by probably 4 or 5 people that I've spoken with lately. At the end of each episode, I hang up and then I say to my guest, I say, who else do you know that I should have on this show? And I think 4 or 5 times now they've said, oh, do you know Fuquan Bilal? And we were just talking before I hit record here, and I had to apologize that I didn't remember that we had met about a decade ago in New Jersey at an event where I had met about 100 people that day. And so, and I've just seen you in this space for a long time and have always meant to connect. And so I'm just really happy to have you on here today, so we can finally have a chat. So thanks, Fuquan, for being here.
Appreciate you having me on. And with a name like Fuquan Bilal, that should probably be a name you'll remember 10 years later.
Probably. Right. So you've come a long way in a decade of what? Tell me a little bit about what you're investing in today, and sort of if you would take us up to how you got to this place where you are with your current fund, that'd be awesome.
Yeah, so today we invest in 100% alternative assets, whether it be fix and flips in New Jersey, where I've been investing the last 23 years. Cut my teeth in about 99, and I'll get into that in a few. And we also invest into multifamilies for cash flow. And this time in the market where we are, it's all about the cash flow, using those rentals as a hedge against inflation. Just to go back a bit, I cut my teeth back in 99. For me, working a corporate job, and I had a cousin of mine who started off in real estate. We've always been like rivals since we were younger. Who made the most money? Who had the nicest sneakers, and just all competitive, right? Competitive nature.
Good to have.
And he did a deal that he made like $40,000, which at the time I was like 23, almost 24 years old, making like $85,000 a year. I had a really good corporate job, and he made half my salary in a few months. And I was like, wow, I got to see what is this guy doing? So I started to shadow him around. And lo and behold, I found out exactly what he was doing. In the area where we come from, I was born and raised in Newark, which is, the ghetto pretty much. But there was a lot of opportunities there where there were a lot of blighted properties, dilapidated properties, and you had a lot of outside people coming in, buying properties for 30, 40,000. At the time, they were worth, you can fix them up and sell them for 160. You put a good 50,000, 60,000 into them and make a nice profit. So I started to shadow him around, and within 6 months, I was able to make half my salary. And the writing was on the wall from there. I put my 2-week notice in and started my journey in 99 and had the opportunity to ride the wave until the market crashed. I've been through 2 market cycles, 9/11 and 2008, which 2008 really rocked me. Taught me a very valuable lesson. It actually humbled me, made me become one with self. Had to go through that whole process and pretty much start all over again. It's when you value money and you pretty much worship it, and you're a slave to it instead of a master to it. When you lose a substantial amount, you really, get punched in the face and have to start all over again. It was a ripple effect from there. Going through a divorce, I was fortunate to get custody of my 2 boys, which really made me the man who I am today. And made me realize, what the real value of life is. So I had to do some soul searching. When I came on the other side of the hill, I was able to pay all my investors back. I didn't file bankruptcy, lost a couple $1 million of my personal money, but I still knew how to do it. And the things that I was lacking, which I have in my life now, is, being around people, right? Your network is your net worth. I wasn't around the right people. I got started when I was 23. By the time I was 28, I was a millionaire. I thought I knew everything. And like I said, 2008 humbled me. I had to start all over again. Around the middle of 2010, I started to, pick my face up off the ground and start trying to figure out what's happening in this real estate business, because it was just nothing happened. It was just a melees of properties. And, a lot of things were still in this embryonic phase of turning around. I started watching more podcasts or more stuff that was on the internet, and discovered the world of notes.
Yeah.
And at the time I was doing short sales, right? So that was the play then, doing short sales, getting that short sales, selling it out. So I was slowly getting into that and discovered notes, invested some of my own money and made double digit returns. And, the next 8 to 10 months, and I was hooked. I was like, this is the best thing ever. No tenants, no toilets, no trash, no termites. I'm in.
Right.
Laptop, cell phone. I could make great returns. And none of my investors believe, like, you're crazy. You're going to lose money in that business. No one understood at that time in 2011 the power of the note business. And there was one company, PPR, Dave Van Horn, take my head off to those guys. They really taught me a lot about the business. I became one of their students, and I was pretty much one of the few guys up north in Jersey doing notes. And I remember going to all the RIAs and telling people about notes, and everybody was just like, this guy is crazy. I was the only note guy. And I think we met a few years later in New Jersey when they had the expo in 2013. A lot more people started catching on, and I was starting to build traction. So that's a little bit of my backstory. Today, now, we pretty much run a fund, which is our 7th fund we have in place now, that specialize in fix and flips and multifamily. And those fix and flips kind of give us that cash injection we need. And the multifamily, anywhere from 40 units to 100 units. We focus in the Southeast region, Alabama and Georgia, that give us the cash flow we need to kind of offset any SG&A, make our quarterly distributions to our investors.
So tell me a little bit about that. So you have your own team and you're going out there and you're doing the actual flips, or are you funding the flip? Are you the debt side, or are you doing the whole thing? What part of that?
No, I get my hands dirty, Brett. I'm not the armchair guy. I'm outside in my Timberland boots and my jeans, and seriously, I'm getting it done. I mean, that's how I was built. That's what I know. I love it. It started off really going back to my community and making a change in the community, repairing those dilapidated properties and revitalizing the community, putting properties on the tax roll. That really gave me my purpose. I was driven for that because I was able to go back to the hood, so to speak, give the guys in my neighborhood who had criminal records, who would make excuses. I can't get a job because I have a criminal record. Hey, you could do a demo job. We got work for you. Get off the street. Let me give you some work. Yeah. And we did that. We did that for a while, and that worked until one day, March 30th, 2001, being in the business 2 years later, it kind of backfired on me because it was an inside job. I wound up getting shot like 5 times in my office for a botched robbery. We used to pay cash every week to the guys.
Did you say you got shot 5 times?
100%. I mean, that's the best thing that ever happened to me besides 2008. Those are 2 moments in my life that really, I mean, those are lessons that I learned. What I learned from that is you can actually go and help the community, but you don't have to be like, hands-on doing payroll and stuff like that. So you can actually hire general contractors, Fuquan. You don't have to be the GC. So I kind of learn how to work on the business instead of in the business, after that. But it was an inside job. I got shot 5 times. I was fortunate. I was here for a higher purpose. So I was off my feet for about 6 months, did a lot of work from home, changed my circle immediately, got out of my partnership with my cousin. I was just so paranoid. I didn't know where it came from. And I didn't trust anybody. So, from that point on, I was on my own and kind of had the opportunity to ride the wave. And when the market crashed, the biggest lesson I learned from that was family is the most important thing. Your kids, your family, you need to create a business that funds your lifestyle. Like usually we're working and chasing work. We figure out what we want our life to be and then create the business to fund that lifestyle we want to live. And then you have the lifestyle business. So working on your business today. And your business is a lot because you have to develop system processes. My mentor already told me there's 3 things you need to be successful in a business. That's scalability, which is systems and processes, the capital to buy, and the assets to buy. And you need all 3 at the same time. So just keeping that mindset and just trying to build a company that can create an impact. So as I was saying, we started off in the area doing that, revitalizing the properties. But now today, we kind of work with mid to higher end properties. Okay. After COVID, we kind of got priced out of the area after COVID because had a bunch of New Yorkers coming over to New Jersey. We're about 25 minutes away from the city. But anybody who can afford a $200,000 house was just buying them, overpaying 30% of a market price. So it got really competitive. And I was like, you know what? I have all this experience. I've been doing this for this many years. I can level up and be on the same level as the builders. I can buy a house for 500,000, for 200,000 renovations, sell for $1 million. We can play that game, and it'd be less properties to manage on the flip end and more profit actually. And we don't have to worry about materials being delivered and being taken from the house the next day because of the area. So we decided after COVID to divest the whole portfolio we had of those rentals in New Jersey and start focusing more on higher end properties in Jersey doing fix and flip. So that's kind of what we do now, the mid to high end projects. And then we have the rentals in the Southeast where we still can do our impact project, get those C plus properties, revitalize them, stabilize it, keep a percentage of the units for battered women and children, Section 8 resident, and also the senior citizen. So my mom was a single parent with 5 kids, and I grew up on welfare. And for me, I know there's good people in those areas. So, our mission and purpose is to go in those areas, revitalize those properties, make sure it stays affordable. But we have a large percentage of the units that we take to max rent, so our investors can benefit from great returns as well.
So I saw on LinkedIn recently, I think you're closing on a multifamily somewhere, maybe in the Southeast. So I want to just sort of wrap my head around the thesis. So right now for the investment thesis, it's like you've got rental properties that fund the operations, and I assume you build up, stack some cash to go do your flips. Is there a note component to this also, or is it all at this point? Is it all fix and flip and equity investment into multifamilies, or what else? What am I missing in that?
Yeah, that's a great question, and it kind of morphed over into part syndication. I'll explain that. So in 2020, we just launched this fund because we raised the capital of our previous fund by the end of 2022. I'm sorry, the end of 2021, we raised fully subscribed in our previous fund. So we launched this fund in January of this year. And in our previous fund, we were buying multifamilies, we were doing fix and flips. And I said, you know what? The lending is going to change. All that free helicopter money came out. So we knew inflation was going to happen and things was going to pivot. I've been in the business for 23 years. I've been through a few market cycles. I don't know it all. I don't have a crystal ball, but I'm in some high level circles, run with some high level guys, economists speak and kind of give us the play of what they think is going to happen. And we take from there and do what we need to do. So I was just preparing for the future and saying, if the leverage is going to change, for example, when we go to agency debt and they're giving out 75%, possibly if they lower it, which they actually wind up doing at 55, 60% as the 10-year increase and things change, how many units will we be able to buy? We're buying $10 million units. We're going to have to put up $4 million each unit plus closing costs. How many of those we can buy, right? The fund is a $50 million fund. Would we rather create a syndication such as a sidecar, be a 40% partner in that syndication, put up maybe 25%. So if it's a $4 million raise, we'll put up $1 million, and then we'll do a syndication for the rest. And that way, people who want to get the depreciation, people who want to get the upside or higher equity percentage, and some small cash flow, they could play a part in that. And instead of us taking $4 million and deploying it to one building, now we can create 4 syndications, and we're in 4 different 100-unit buildings. So we have that set up where we do that with the fund. And then we have equitable interest. We got skin in the game. Investors like that, especially today.
Yeah. So that's interesting. So I just want to make sure, I'm going to just repeat back what I heard to make sure I've got it right. So your fund will act as the sponsor and take a minority interest in it. And then there's, do you put together like a special purpose vehicle? That's the syndication that other folks can invest in, and your fund has a smaller piece and manages and runs the thing. Did I get that right?
100%. So investor can go straight into the syndication because everybody's investment portfolio is different, right? We were talking earlier and you were saying, hey, my mindset is income. Yeah. So in our fund, we have 2 classes in our fund. One class is a B class where you can earn 11% annual returns. Those are quarterly distributions. And the other class is a C class where you can earn 90% annually. Those are quarterly distributions. The minimum investment is $50,000. They both operate the same. One is a 5-year term. That's where you get a higher yield. You can compound in that class also. The other one is a 90-day call option that you have. There's no term, it's just a 90-day call option, and you make 9% annually on that, quarterly distributions. So if you just want straight income, you can go into the fund, get a set return, and get straight income. If you want depreciation and more equity, right, you can go into the syndication side, and you can get a pref plus some profit participation, which can get you, mid to high double-digit returns. Wow. So it just depends on what your flavor is. So, and remember, in a fund, we're doing fix and flips also. So we're buying, we're fixing and flipping. The fund does have leverage because what we'll do is we're able to compete with the builders because we can buy cash. Okay. So we'll go out, we'll see a property that's $500,000. We'll make an offer. We'll say, hey, we'll give you $300,000 cash. We'll close in 3 weeks. We'll waive appraisal. Only thing we want is environmental. Those are great terms to compete with builders. $300,000 or $500,000 on a property. We close in 3 weeks, clear title, let's go. Yeah. So we get the CO, we close, and then we take it to one of our lending partners. We might have like a DLP, a Lima One, a Renovo, one of those lenders. We have about $10 million of it's not really a line of credit. It's available funds they will give us for acquisitions. And what they would do is they would give us 65% loan of cost for renovation, up to renovation, 65% loan of cost. We'll then finance with them to get that capital back in the door that we just spent in cash. And then now we have a renovation draw. So that's usually how we do in that fund. And it's a benefit also more to the Class A members, which is the management company in the fund, because the depreciation that comes from the multifamilies kind of offset the capital gains from the fix and flips. But the investors in the fund don't really benefit from that more than they would benefit from the syndication.
So that's really interesting. So so multifamilies and fix and flips exclusively. There's no debt. You're not carrying. You're not holding notes in this same fund. No. It's open. It's a rolling fund. People, are you still open? Are you taking investment now, or what's that look like?
Yeah, it's a $50 million raise. So, it's open until we raise the $50 million. We just launched it in January, so we have plenty of room in it. It's accredited investors only, 50,000 minimum. Yep. And we're looking at I'm looking at the end of this year, speaking to a lot of investors. We got a lot of people who want to put short-term money in because the market is, the volatility of the market. Yeah. But we're looking at other ways that we can assist investors. They like the 90-day call option, but some of them, maybe want a higher yield. So we're looking at other ways that we can possibly help investors out, get a higher yield, but hold their capital a little longer. So that's what I'll be working on this quarter. But right now we have 2 classes. I'm thinking about rolling out 2 more classes in the new year once we update, because every year we have to update the PPM with traction, things that we did, assets we purchased. So when we go for that update, I'm thinking about rolling out 2 more classes. I don't know what the terms would be now. Still surveying a lot of investors to see what they're currently getting, where they're at in the marketplace, what are they looking for, so we can see if we can make another pivot just with classes. I always like to service the investor that way. It's not about paying them more interest. It's just understanding where their portfolio is at and what they're looking for. So, we take a survey with all our investors to see that and kind of make adjustments and pivots every time we update our PPM on an annual basis.
So there's a list of things I like to make sure that I ask when we're talking here. I think we covered thesis pretty well. I want to talk about edge. What do you feel like your edge is in this? Like why Fuquan? Why this fund? Of all the things outside of the thesis that you have there.
Yeah, as I mentioned earlier, I'm really hands-on. You find a lot of guys who's just in the office behind a desk. Like, I'm out in the field. I love it. I'm hands-on. I know I'm responsible for investors' capital. If you look at my calendar to speak to me, I have appointments on Saturday, Sunday, evening, 10 o'clock at night. I block the stuff with my family first, and then I make myself available for investors. So communication, I definitely would say, is edge, because investors like that, someone that will communicate with them immediately, respond to them immediately. I'm actually evaluating on the assets that we buy. along with my team. But of course, I make sure I have my hand in it to get the last blessing on it. And I'm involved with a lot of the acquisitions. So just being hands-on, we're like a boutique shop. We're not really trying to, run a $200-300 million fund. We just want to have a small network of investors that we still all know their first names. we still know who they are. We can communicate with them. But being local, as I mentioned earlier, I've been investing for 23 years, and the areas we do our fix and flips is exclusively in New Jersey, where I've been doing it the last 23 years. So knowing these markets, everything is local, knowing where the New York buyers are coming over at, laser focusing on that area, and be able to concentrate on that one thing in my market, which is fix and flips.
Yeah.
The Southeast, we divested over the last couple of years. A lot of our rents was in New Jersey. It's not a landlord-friendly state. Atlanta and Georgia is, so we planted our flag there a little over 2 years ago, and just been slowly buying, 40 unit here, 100 unit there. We actually just closed on 120 units in Macon, and I guess the post you saw on LinkedIn was the sister property to that, which is 143 units, which is like 15 minutes away from the property we just purchased. Same owner. We're just waiting for 90% occupancy, and we believe that we will be able to close that February or maybe late March, because it's 90 for 90 we're waiting for to get agency debt. So that's already under contract.
So how many doors do you have in that then, in this fund? Do you know? It sounds like several hundred at least, yeah?
Yeah. And this fund is several hundred doors. And right now we're working on about 26 fix and flips. And we're just excited. We kind of put the pause on the acquisitions with fix and flips probably until about the end of first quarter. We want to see where the market is going. We want more sellers to be more desperate. So if we buy anything, it's going to be stuff that's been on the market at least 6 months plus. So we're waiting a little bit more to the beginning of Q2, mid Q2, to see if there's enough blood in the street before we buy. Because those who have cash are going to be positioned very well to take advantage of what's coming. I mean, who knows what's coming? Something is coming. I can feel it coming in the air tonight. Oh,
I agree.
Lord. Yeah, we don't know what's coming. We don't have a crystal ball, but we just want to posture, for whatever is to come.
Yeah. Well, that ties in well to the next thing that I was going to ask, which I think you've answered with that, which is talk to me about what you see as the risks out there. And I agree. It seems like the risk is going to be you buy too high, and it sounds like you're mitigating that by easing off the acquisition and waiting to see. That makes a lot of sense. What else are you doing, or what else would we want to know about in terms of what you're doing to mitigate risks out there?
Yeah. So when it comes to fix and flip, people want new product. Right? Yeah. They don't want, they'll take something renovated that's nice. If you gutted it down to the beams and you can show you did all new plumbing, electrical, HVAC, roof, windows, everything, people want that new product. They don't want the lipstick on the pig. They don't want the quick, swapping fixtures out, painting, popping in floors over top of floors. They want the real product. So we've been focusing strictly on that with our fix and flips to make sure we bring a great quality product to the market. We're doing a lot of ground up renovation for those higher end areas that's $1 million and up. Mostly all that stuff is ground up. Or a major addition, and we took the house down to the studs and we're doing all new work. And they can see the quality of the product. So we're going to stand out against others that's on the market. Even though if it's a higher ticket item, we have the best quality product that's on the market. Again, we're like 25 minutes away from the city. So, it's not that we're not seeing the same thing others are seeing where there's longer time on the market, but things are still moving faster than it is in the West, because it slows from the West to the Midwest to the East is really the last people who get hit with declining values and things like that. But, what used to be 1 week on the market is now, then it went to 3 weeks in the market. Now we're steadily at 30 days. Things sit in the market before they sell. And we're seeing the things that are brand new, renovated, still, I don't want to say flying off the shelf, but still moving quickly on today's market. And that may change as interest rates increase and things go. So that's why I mentioned we put a pause on that. We're focusing more on acquisitions of multifamilies. We're starting to see that market soften up a little bit. What we're doing there, even in that space, is being very creative and going back to the note business. Seller financing. Hey, Mr. Seller, how about you hold this loan and you be the bank for 3 years? That way you don't trigger a big tax liability. And, maybe you give us 5.5% interest only for 3 years. Give me time to stabilize this thing, do some renovations, and I refi out and pay you later. So we've been using that strategy for acquisitions of the multifamily. Yeah. And once the sellers have, once there's abundance of inventory in the market for the fix and flips, we'll be doing that same strategy where we can actually do seller financing, let them be the bank, cash them out later on, give them a decent deposit now so they can be happy, and do a wrap or whatever we can to get control of the property and renovate it and sell it. So
nice.
A lot of different creative strategies we can do with creative financing in this marketplace.
Yeah. It sounds like you're just finding a way it's nice how it's not so rigid, like you're able to flex with, whatever the market is bringing to you.
You have to. In this market, I mean, I've made so many pivots in my life. I got hurt in 2008 because I was just doing flips. I really had no cash flow for rentals. I was forced to be a landlord. I learned to know space. I went crazy and bought second mortgages. When I used to tell people I'm raising money for second mortgages that are delinquent, they were like, this guy's crazy. Like, talk about risk, right? Yeah. So, once I went through that hurdle, and really learned that space and mastered that space, we started to focus on more performance to get cash flow. Then we pivoted to buying first and seconds. And then we said, okay. Then we started doing a little bit of fix and flips. And then we pivoted to having a fund that did notes and fix and flips. And then we pivoted to a fund that did notes, fix and flips, and rentals. Kind of creating that hybrid diversity model. And then after COVID, I was like, we still own a lot of notes today in our previous fund. But after COVID, I was like, I'm not going to buy any more notes. It's too litigious. The lawyers are making all the money. It just doesn't make sense. Pricing is all over the place. I can control a fix and flip. I just got to make sure the contractor don't drive my guys crazy. And back to your question earlier, we do have a team. We have an in-house team. We have an international team. My international team from the Philippines, they support our in-house team. We have about 10 people on our team, construction managers, project managers, business relationship managers, regional property manager, asset manager, assistant property manager, construction office admin, executive assistant. We have a really thorough team in-house. And I'm so grateful for the team I have. My goal as the chief visionary officer, I don't call myself a CEO. I don't even know what a CEO is. I'm the chief visionary officer. My goal is to keep the culture intact and create success, which is our fourth core value, optimize daily experience sustainable over time. And if I can do that with my team, we can bring that down to our clients, and then we all can be successful.
Nice. Well, that's awesome. So we covered the thesis, your edge. We talked a little bit about the risks. You said you do have to be accredited. The investment minimum, did you say 50K?
Sure. Yep. 50K.
Target returns, it sounds like. Is there a sweetener on top of the 9 to 11% return that we talked about? Is there, like, when you have a disposition later, you're selling stuff, or is it fixed at that rate? How's that work?
Yeah, it's fixed at that rate. For those who want to get some profit participation, they can go into the syndication, through that side. And the fund is just fixed. You can compound it. So we have a feature you can turn on and off only in Class B. The target return for that is 11%. Since inception of this fund, we've been meeting pref on target. But the target return is 11% in Class B. You can compound that. You can turn that feature on and off, and you can earn a little bit more. It turns from an income to a growth when you compound it. Class C, which is a 9%, same thing. We've been on target, haven't missed a distribution payment yet or underperformed on that target. But you can't compound in that feature because that's a call option. It's a 90-day call option.
Okay. And so maybe help me understand that part where it's a call option. I understand call options, and I have call options right now in the market. But help me understand what that means in terms of your in your fund parlance.
Sure. So I mean, you can invest, and anytime you want your principal back, you just call it and you get it back in 90 days, and you earn interest on the way to it out. So it's short-term funding. We use that money primarily for, again, once we make that fix and flip acquisition for cash, we'll reach out to one of our lenders, put some leverage on that 65% loan of cost, get that money in the door in 45 days. or we use it for renovation schedules. Usually, as you know, when you do fix and flips, the bank give you a draw. You have to do the first phase of 100,000 or whatever it is, and they'll come out, inspect, and in 48 hours give you the draw. So we use that money for stuff like that to kind of help us leverage that piece of it on a deal.
So lockup's only 90 days.
What a lockup is until you call it. It's not locked up. Is you put it in a fund. You can leave it in there for a year and call it. You could leave it in for 4 months and call it. You can have it in for a month and go, hey, I want my money back. You can, from the beginning, say, I'm giving it to you now and I want it back in 90 days. And we will then take that and use it, how we can to kind of help. That's just the extra leverage component that we have in the fund.
Nice. Well, that's awesome. Fuquan, this sounds great. How should folks get a hold of you if they want to learn more about this and dig into more details?
Yeah, as I mentioned earlier, I'm really hands-on. I would love to talk to you. You can go to NNGCapitalFund.com, Nancy George, CapitalFund.com. There's a big orange button on the very front of the page that says schedule a call. Go through the steps, answer a few questions, schedule a call. I'll be more than happy to jump on a Zoom call with you to further elaborate and give you more details on our offerings.
Awesome.
Or you can go to YouTube also and just put my name in, Fuquan Bilal, and you can see some of the finished projects, the renovations that we've done. Nice. That's about it.
We'll get a link. We'll get a link to that in the show notes too. Appreciate you coming on here. You're the first guest I've talked to who's been shot 5 times, and still to talk about it. But you've been, like I say, you were referred to me by a handful of folks at least, and so I'm just real glad we were finally able to communicate one-on-one here, and it's been great having you. And thanks for being here.
Thank you. I really appreciate it, man. Thanks for having me.
My pleasure.
All right.